Welcome to Private Banking Strategies Podcast with Vance Lowe and Seth Hicks, your secret weapon to protect your assets and never have to start over financially again. Vance and Seth help high net worth individuals, families, business owners, and investors structure an asset-protected, tax-free fortress for their families. Learn how to keep what you earn and use the velocity of money to create your own private banking system. Join us on this journey as we explore the secret strategies of the rich and political elite and help you take total control of your financial security. Now, on to the show.
Well, hello and welcome to Private Banking Strategies. Vance Lowe and Seth Hicks. Vance, how are you?
I'm doing great. I'm looking forward to continuing our last discussion. So I'm hoping that everybody that's tuned in for us today will be sure and listen to the last one we just did.
Yeah, we've been talking about the private family bank, and also known as a 100-year family bank. And we've been describing some of the architecture of this, some of the policy decisions and motivations behind it. And we've been talking about it for a few weeks now, and it's well worth the discussion, and it bears emphasis and repetition, because this is how we've seen the most successful families operate and grow their wealth curve. And we talked about it last time. I mean, wealth without structure, it dissolves, but wealth with a purpose and with the proper strategies and put into a set of rules with shared purpose in a family and rules of governance, those are the folks that create floors for the next generation to elevate upon. And that's how you really build a family legacy. And Vance, I've been in times where I've had very little money and not had the resources to even do minimal things in life. And then I've had times where I've had an abundance. And it's much easier to operate with an abundance, with wisdom and abundance. And it doesn't mean that you're going to never have challenges or trials in life, but working from a place of abundance and set financial strategy with our methodology is 100 times superior to being poor and lacking.
You know, that's so true. And I found human character does just the opposite. When they're in abundance, they follow systems, and it seems like it just compounds one success after another. But if they get struck down, they stop following basic principles when they should be fine-tuning those principles and adhering to them more directly. For instance, no matter what, there are some basic rules and procedures that we all need to follow to be successful. So all this 100-year plan, some of us are just starting out. Some of us have been doing this for, a couple of decades. But no matter where we are, we all follow the basic principles that we first start with, and we just add upon them. We're going to mention an offer, a book that we have, but I'm going to go into that book and say there is a principle to be taught in there. And that's the rule. We showed an example of compounding a penny over 30 times and the results that happen over those 30 times. There's no big deal about that until we get to about compounding number 25 and on. But there's so much that we can learn from just that example. I hope people don't just, that's interesting, that's huge, and walk on. No, this is your life. How often have you set things up to compound? This is where we're at, folks. This is what we're talking about. If we take $1 and we're able to put it to work for us and have it produce a volume of return, a repayment structure or whatever, we now have money working for us. So there are rules where we pay ourselves. We have to go to work, we have to live, but we have to live within our means, and we have to put money to work. So all of these are rules and strategies and procedures that we need to follow. How many times, depending on where we are in life, I found out about this strategy late in life, in my early 50s. Where was this when I was young and really getting into money management in my late 20s? How many doublings could I possibly have? And what people don't understand in this strategy process is that find out how fast you can double something on your own, not having somebody else double it for you, and then see how many doublings you have. So Seth, which doubling? Is it the first doubling that's the most important, or is the last doubling that's the most important?
It's the last doubling, of course. Yeah. Like you said, years 25 and on are basically straight up.
So what I'm saying here, folks, is if we miss the first doubling, if we procrastinate the full time of a first doubling, we end up losing that last one we could have had. It seems to be the norm. We're going to lose that last doubling, which is 50% of everything at that point. So, that's just this 100-year plan are all based on little things that are easy to accomplish. We just need to put them all together.
Right. Yeah. Some of the principles that we're talking about, folks, is that money must flow. Idle dollars lose value. And we go into this in great detail with why you don't store cash value in centralized banks. Next idea, on top of money's got to flow, is that same capital's got to be safe. It's got to be liquid. It's got to be protected. And as I mentioned, centralized banks are not safe and they're not protected. And if you do some research on the Dodd-Frank Act, which is all on our website.
Let me jump in here. Like I said, we think we know something about money when we really don't. You need to know the difference between average rate of return and yield. Folks, we've got to understand putting money to work versus putting money to sleep. If I invest in a 401k, am I putting my money to work for me? If I invest in a stock portfolio, am I putting my money to work for me? Find out, because the answer to both of those is no. You've just put it to sleep for you. The people who have your money, now they're the ones that are putting it to work for them.
That's right. And so keeping control of the asset in a protected and safe liquid way is why we use the whole life insurance contract properly structured, because in that reservoir, it has performed for centuries through every economic downturn, through the Civil War, through the Great Depression, through the 2008 mortgage reset, and will likely overcome every financial crisis because it's been in existence far longer than banks. And that's one of the reasons is because they have a dollar to dollar cash reserve. They don't get to play funny money games where someone brings in a dollar to Wells Fargo or Bank of America and they somehow take a dime and put it in the account for that person, and they take the other 90 cents and they lend it out times millions. So they didn't earn that money. They just had use of the money. And if everybody goes in for their money at the same time, that's called the bank run. It's not there. And so long as everybody keeps playing the charade, it works. Whereas life insurance companies, on the other hand, and quite contrary to that poor fiscal management, they have to have a dollar on hand for every dollar that they're given. So great distinction there.
And so learning the basic rules, set up your rules of how money flows, that it always needs to move because money has no value except in the exchange. I remember as a little kid, grandparents, and there were people who would store money in shoe boxes under their bed, thinking that was the best thing. Maybe way back then that would be the case. But today, the way our system, our society, our lifestyle works is money has to move continually. I don't know if people really understand this or not, but banks won't even sit idle in the bank overnight. It's called overnight lending. It moves forward with the sun all around the world 24/7, 365 days a year. Every day money moves because there's no value if it just sits.
That's right. Another thing that we build a foundation upon is the principle that the one who possesses the gold makes the rules. Or another way to say that is the entity who makes the loans controls the wealth.
Yeah.
He who has the gold makes the rules. And so when people go into, and I'm not picking on Wells Fargo or Bank of America, I'm just using them because everybody knows those centralized banks. You go in there and you ask for a home loan mortgage or perhaps an auto loan or business loan, and they set the terms. And usually they're quite willing to loan you money when you really don't need it, when you've got 800 credit and lots of cash flush and don't really even need that money from a financial standpoint. And they set the terms, they set the interest rate, they set how long it will be. And then they play funny money math with how much interest you have to pay back on top of the principal. Just look at your disclosures, folks, on homes that you own, truth, and you'll see that you borrowed, $300,000 to buy a $360,000 house. By the time you're done paying it back, it's going to be $1 million to the bank. That's funny money math at 5% interest. You borrowed 300,000 at 5%, but you got to pay back $1 million. Doesn't make sense. And so in some countries, that type of mortgage loan structure is actually illegal. And regardless, I'm just trying to shine some light on the fact that centralized banks are not where you want to bank. You want to have a capitalized family bank through your whole life insurance companies that creates liquidity and access without centralized bank regulations.
Did that story feel like it was about you? Do you feel like you are generating a lot of revenue but are not moving forward as fast as you would like? Do you feel you should be making more progress toward your financial goals? Do you feel stuck? Let us help you get unstuck. Are you ready to take action and get your own private bank? Please visit us at www.privatebankingstrategies.com.
If we can control the banking equation, and that's what it's all about. Magic happens, and I guess you could call it magic if you don't understand money, but putting the banking equation back in the family, back in your life like we used to do it, is where everything happens. So all the rules are set up, we follow correct principles, we finance. Everybody has to finance, but we have to pay back our money. And that's the difference. If we save up cash, folks, and you go purchase a car and you pay cash for that car, you're following your mentors, your parents' rules, pay cash for everything. And that car costs $50,000. You just took $50,000 out of production for the rest of your life. How many times could we get that $50,000 to double? And unless you pay that back with interest, you're still going to have to come up with savings. Remember, Seth, I catch people up all the time, and guys, we'll have fun doing this. I ask people, do you have a car payment? And they go, no, I got my car paid off. And I kind of smile at them and say, I don't really call them liars, but is that car wearing out? Well, yeah. Is it held its value from when you purchased it? No. So eventually it's going to wear out and you're going to have to buy a new car, right? So you're going to have to save up if you're going to pay cash again to purchase the next car, correct? Yeah, you have car payments. So don't kid yourself. Don't tell anybody that you don't have car payments or anything that is wearing out that has to be replaced. The fault comes from not preparing for that, not using the money, getting it back with interest, which will stay pace with inflation so that as prices go up, taxes and everything else goes up, you're able to stay pace with that. Inside of a family bank, your family qualifies. You don't have to go through all the rigmarole and the disclosure of private financial things, your tax returns, which are supposed to be private, to institutions who just lose them. I can't tell you how many times when I've shut a loan down and I said, okay, I've sent you my tax returns and want them back. Can't get them back. That's private information. So these are all things that basic understanding of how money works. Where's the risk in a family bank? It's whether we make the payment back or not. What's the risk if we pay Honda Finance and we lose our job? We could lose the car and we could lose our credit. In a family bank, if we lose our job and it's not our fault, the family bank's going to work with us. Okay, we can refinance the loan, we can do whatever. They're probably not going to stop it, but they'll help that family member get back on their feet and get the loans paid for. Everything, is going to be returned. All the profits, all the compounded interest, all of that comes back into the family bank. So there's just all these procedures that we can do in 100-year legacy. That's just, to me, I'm the guy that gets to help teach this to families, and they just smile and their eyes open up and it makes sense. It's logical. There's no gap of imagination that we have to come up with to set up a plan and follow it.
The principles that you're describing, these are principles that banks understand and operate under, like we've described and we've talked about many, many times. Corporations understand them with corporate owned insurance policies on employees, which obviously we've talked about many times as well. The banks are the biggest buyers of life insurance on key employees to the tune of 20 billion, give or take a few billion a year for Wells Fargo and Bank of America. So that's quite staggering. And the way those work is, we'll just go on a quick rabbit trail, is like if you're a corporation and you take out life insurance policies on your employees, you can provide them with performance-based incentives, vesting incentives, and provide for catastrophic events for family members in the event that that employee dies. So there's just a lot of win-win application to it. But the point that I'm trying to make is that the banks understand these principles, corporations understand these principles, the ultra wealthy and the wealthy understand these principles. We're making it available to even common man, those people who are consumed in debt. We're trying to teach folks how to take control of the financial equation, how to get your feet on top of the rock and build from there. As families learn these systems and build systems around these strategies and concepts, you're going to succeed. You're going to have a capital warehouse for your family. You're going to have a safe reservoir for long-term compounding. You're going to beat inflation and taxes as your principal grows and compounds inside this bank tax-free. There's just so many applications of it that the reason IBC is called infinite banking concept is because the applications become infinite, which are only dictated by a person's entrepreneurial setting, their business. The applications vary depending on someone's creativity.
It really is simple little principles that we should just make as part of our lives. We talked about money must flow. Otherwise, it's going to lose the value. We need capital to be safe, but it also needs to be liquid and protected. Wealth must grow, and be compounding on a regular basis. How many uses can we get out of a dollar? How many different things can we get the same dollar to produce? So this 100-year plan, I would really, really suggest it's not complicated. It's not all about trust work. It's not all about legalities and sophistication and hard things to do. I'll throw in here right now, Seth, that for me to run the entire plan that I'm on, my 100-year banking strategy does not take me 30 minutes a month. I go in, I open it up, I move the money wherever it is, I make the payments that I need to make, I move money either in my policies or back out if I'm getting ready to make another purchase. If my bank is full, then I'm applying or figuring out how I'm going to increase, my policy count. I think I'm as sophisticated or more sophisticated in all of my dealings with banking than most families are. So it doesn't rule your life. This is easy to do. It's not going to change the way you live. It's not going to make you have to work harder, maybe a little smarter. Okay. It's all about who ends up with the money. Everything we're doing here is, if I put this in play, at the end of the day, who's going to get that dollar? Me back, or somebody? Am I going to lose it and going to have to go and recreate it again? That should be the question that we always ask whenever we're getting to put money into play. Right there. Am I getting it back, or am I going to have to recreate it?
And regardless of how these particular strategies will be implemented family to family, all families share the common desire to build something that lasts and to create a legacy of purpose and of strength for their children and their grandchildren and their great grandchildren, and to give their legacy a place to start that they created for them, and to literally build upon the first generation's ceiling, and then for grandchildren to build on the children's ceiling, and to preserve that wealth, not just consume it, and to pass down this financial wisdom rather than what's been sold in a false bill of goods to the common culture. So we're looking to show people how to build architecture to create your private family bank. We're showing folks the science that powers it and how to put multi-policy structures in place that create waterfall legacy. So, folks, if you want to learn more, you can find us at privatebankingstrategies.com. And therein, you're going to get an offer for a book that Vance and I authored called Secrets That Banks Don't Want You to Know That Are Going to Keep You from Being Wealthy. And so we're revealing and shining light on things that you may or may not have ever heard before with that book. And so put in your name and your email, and in exchange for that, we'll give you a PDF copy and an audio version. You could listen to it on the go. But more importantly, if this content resonates with you, those emails are going to have a calendar link to Vance's calendar. And if you want to learn how to create a 100-year family bank and a legacy that will outlive you, having your children and your grandchildren, your great-grandchildren kissing your picture, then schedule a call with Vance in that email. Vance, any closing remarks?
It's such a wonderful topic. That's why I love to do this. It's just freedom if you want it. If you really want to live life to the fullest, it does take money. And I'll learn what it can do for you. Take the next step.
Thanks for joining us, folks, and hope to see you on the next episode. Bye for now.
Bye-bye.
Did that story feel like it was about you? Do you feel you should be making more progress toward your financial goals? Do you feel stuck? Let us help you get unstuck. Are you ready to take action and get your own private bank? Please visit us at www.privatebankingstrategies.com.
Thank you for listening to the Private Banking Strategies Podcast. Click the subscribe button below to be notified when new episodes become available.